Simplicity is the prerequisite for reliability. Edsger Dijkstra. My friends, simplicity is what we are all about. As you glance at our charts, you see very simple charts before you. We have an ATR set on there. We have our Heiken Ashi candlesticks, which we love. And we have the STC. That's the only indicator that we're really using. Oh, and also you can see the 200 EMA, which is our decision whether we're going short or long. If the ETF or stock is below, we're looking for short trades. If it's above, that is the price is above or below, we're either short for below, long for above. Now we're looking at the SPY. That's the Standard & Poor's 500 ETF. Run by spiders. What are we looking for here? Well, we're looking for down trades. And of course, we entered a little early on this one. Told you guys yesterday I'd done some backtracking and looked at how often things were setting themselves up correct. I tell you, the T for the topper is what I see over and over again. You see some green up movement in this bearish market, and then you get a T or you get a strong red down candle, and over and over and over again in my backtracking it showed me that you had down movement for at least 4 candles. So when we saw this latest one set up after 3 days of up movement, we jumped in the morning on the 18th, looking to get into a position where we're willing to risk 3.34% for a double gain of that, a 6.67. We went ahead and jumped in. So far, that position is up 3.72%. You might say, Tom, you're jumping into a stock or an ETF that's losing value. Are you an idiot? No, I'm not an idiot. We can either short this with what? With a put, or we can go into some type of inverse fund, such as the ProShares Short S&P 500. And look, lo and behold, what has it been doing? It's been going up. Now, it costs significantly less than the S&P, but again, it's set to move the same percentage up that the S&P is going down. We have a great training on that called Inverse Funds, How to Make Money When Markets Crash. That has been working out very well for us so far. We're still in that trade. Everything is moving in the right direction. You can see throughout the course of the day, we reached lower lows. Things did pull back a little bit toward the end of the day. S&P ended up 0.04%, but again, moving down quite nicely. So that is where we are at this point. What about the Qs? We did the same thing on the Nasdaq 100. Again, willing to risk 4.41% for an 8 point, it'll pop up right here. Just want you to see an 8.82% gain. We are now at 4.68%, or that was the low for the day. Ended up down 0.31%, the Nasdaq 100. So that short trade is going nice. FYI, what is the single inverse for the Nasdaq 100? Here's one, PSQ, Papa, Sierra, Quebec. It is the ProShares Short. Again, it costs significantly less per share, but again, it moves up the same percentage. And of course, we've seen it tracking up quite nicely. There are some caveats, of course, to using these inverse funds. The fees are higher. They reset daily. So again, you need to practice this stuff. We're not a stock calling service. We're an education firm. We're all about you listening to us, following along with us, and doing your own practice trading to understand what it is you're doing. Otherwise, you're gambling and you're going to get crushed because there's a lot of people with a lot more skill out there than you, and they will crush you. So what do? You practice till you get yourself a rhythm, till you get yourself the knowledge, till you get really good at this. And when you get good, just practice trading. We encourage you to then try a little fractional trading. You might buy If you're trying to do an inverse, you might buy a couple of shares of the inverse of the Qs, PSQ. Cost you $20, $30. And then see if you can make 2, 3, 6, 8% on that. Can you do that? Can you do it over and over and over again? Give it a try. Fractional trading is the next step after paper trading. And you can do this every single day here in the markets if you're using TradingView. Our instruction on how to set up the charts that we use is there in your show notes. If you're not a subscriber, go to chartingwealth.com, sign up every day. We have great trainings for you, all sorts of good stuff. So let's move on from these two practice trades on the Nasdaq 100 and the S&P 500, and we will go to 20-year bonds. Oh, and by the way, those negative moves, the stock multiplier, the success multiplier formula is negative 15 on both those. So you're going in the direction of the weekly and the 2-day. Now, let's look at what's up with bonds. This last down trade we tried in bonds, we did not make the percentage that we wanted. We were hoping for a down move of 4.52%. Got really close, and then things turned around on us. We closed the trade only making 1.17%, not losing anything, and again, making 1.17%. Again, just free money in our practice trade. That's okay. Would have been nice if it would have closed out, bottoming out totally. It did not. So we took our small profit and moved on. Let the market run back up. It's run down some and run back up again. We are waiting for a move down and waiting for the STC to roll over, moving down to give us a jumping in point. When we look at where things are on the 2-day, the 2-day just crossing over, going up. So we're going from a negative 15 to a negative 10 at this point. We look at the weekly chart, it is still down. But we see that we had a doji for the week, means lots of indecision there. So keep your eye on the prize. Let's see which way this is going. Are bonds going to start to recover? Are we going to have the ability again to see bonds move? They've got a ways to go, my friends, before they get above that 200 EMA that give us any long positions. So we'll continue to keep the powder dry, see what's happening with bonds as we move forward in time. That's where we are on bonds. Again, up for the day, 1.14%. That was our biggest gainer for the day. What about gold? Well, gold moving up a little bit for the day, 0.07%. After we had that great short trade in gold, a profit of 2.89% on that practice trade jumped in with the STC crossing over, going down, had a negative 15 on our success multiplier formula. We are still holding. You can see the 2-day is negative, although we do have a green up candle forming, the first we've seen in a while. And the weekly, and I did notice, well, I'll go back to that in just a second. Weekly is still negative, but check out what's happening on the 2-day. This is important to pay attention to. Looks like it's trying to bounce off that 200 EMA. That could be important for us. We will keep an eye on that and see if we do see this STC go back to green and start moving up. That could happen. We'll pay attention. We'll watch, wait and see as we jump into this next week. But at this point in time, we are not in a gold trade. We're still just basking in the glory of that latest short trade on gold. And as I have told you, there's no really good inverse fund in gold. DGZ is one. The problem is it's quite illiquid. The difference between the bid and the ask is too high for me to fool with. So if I'm going to short gold, I'm doing it with puts. We have a great put training. Oh, by the way, I noticed that we had filled up all of our Patreon levels. And, well, our lowest level, we'd filled up all the spots. I did open up several more spots. So if you tried to become a Patreon supporter and could not jump in at that level, you can do it now. First thing we'll send you is that 3-part series, Options Made Simple, the Charting Wealth Way. Now, let's lastly move on to XBTF. That is the VanEck Trust Bitcoin strategy. It is, of course, the Bitcoin future, one of those 3 ETFs that were approved back in November or started in November of last year. Look at how weird. I wanted to point this out, a little training thing. You can see that the STC has gone green and just sharply moved up when nothing happened here with price. What is that about? This goes to show you what happens when you get one of these narrow trading ranges and how much it screws up. Something like the MACD, the Moving Average Convergence Divergence Indicator, that is what the STC is formed from, that and the stochastics indicator. The price percent oscillator that we use for many, many years is a percentage version of the MACD. But what I'm trying to point out to you is whenever you have a very narrow trading range, you don't have a lot of convergence and divergence occurring. Things aren't coming together quickly or moving away quickly. You end up getting screwy indicators. That is told to us by this big green up move when you don't see that reflected in price. Actually, price, it's only been going for 4 candles, but you see where it jumped way up when nothing really happened with price. And then when price went down, it jumped up even further. That again shows what happens when you have narrow trading ranges. How do you know you have a narrow trading range? Well, you can look at it. You can also see your average true range is tight. It's not moving down. It's not widening out. It is just tight in there. And of course, that does not help the reliability of your indicators. So what are we doing? We're just waiting. We're well below the 200 EMA on this, so we'd only be looking for short trades. That last short trade we had was beautiful, down 13.61% on Bitcoin. We are waiting for Bitcoin to sort itself out and to start to really soar. Wouldn't that be great? I can't wait for that to happen. When it does, I'll be waiting with bated breath to jump into a Bitcoin trade. By the way, I will be releasing this afternoon the charting crypto for this week. It was released earlier in the week for our Patreon supporters, and then I put it out on Friday for everyone. Again, you want early access to that. Patreon support is the way to go. God bless, my friends. Appreciate you being with us. Hope you have a great weekend, and we have another great trading week in store for you. Take care.